Welcome back. The Swedish central bank cut its benchmark interest rate by 1/4 point to 2%. Policymakers noted that growth in Sweden's economy remained weak and said geopolitical conflicts could weigh on future prospects. UK inflation rose 3.4% in May. That's in line with economists' expectations. Services inflation was narrowly lower than expected, down 0.1% on a monthly basis. And the Bank of England is set to meet tomorrow with economists polled by Reuters expecting rates to stay on hold. Market pricing suggests the next 25 basis point cut could come in August, when we'll also get fresh economic projections from the central bank, with around 50 basis points of total easing priced in between now and the end of the year, according to LSEG data. Well, the Bank of England's former Deputy Governor is Sir John Geeve, and told myself and Karen on CNBC the recent escalation in the Middle East could complicate the outlook further.
The Middle East conflict complicates this. Firstly, it could have an effect on oil prices, which could push inflation up even further. It hasn't this month, but it could. And secondly, of course, it could be disruptive to the world economy and to trade, which again would be a downward pressure on our growth. So that's precisely where the bank is at the moment. It's saying, well, we think the economy is slowing down. We're expecting that will require us to reduce rates, which are still at the moment restrictive. But should we do it now when inflation has just bounced up to 3.5% against a target of 2%?
Oh, the contention over the Fed. You saw the president having a go again at Jay Powell, didn't he? Well, the Fed is set to release its latest rate decision this evening, and traders are all but certain that we're going to see a fourth straight hold. You can imagine the president already on Truth Social, can't you? Attention, though, will shift to the central bank's rate path, an updated summary of economic projections, the so-called dot plot. Well, policymakers last gave their dot plot policy projections in March. Have we seen much happen since then? Nah, nothing happened on April 2nd, did it? Anyway, a median projection was for 2 rate cuts for the rest of the year, with 4 officials seeing just a single cut and 4 seeing no easing at all. Just 2 participants changing their approach could lower the median forecast to 1 cut. Now, ahead of the meeting, LSEG data shows markets expecting 2 cuts by the end of the year, with the first of those most likely in September. But some economists are sceptical. Bank of America analysts expect no cuts at all this year, whilst Goldman Sachs says the impact of tariffs will likely stop the central bank from cutting before December, even though an earlier move is possible. Well, a hold today, yeah, you guessed it, will probably provoke more criticism of the Fed from the White House, with the president repeatedly urging Jerome Powell to cut rates, using a press event last week to bemoan the impact of higher rates on borrowing costs.
If we would lower the interest rates by 1 point, we'd pay about 1 point less. That's $300 billion a year. Can you believe it? 1 point. If he'd lower it by 2 points, we'd pay $600 billion a year less. That's for years, 10 years, 12 years, whatever we make it. But we can't get this guy to do it. And the fake news is saying, oh, if you fired him, it would be so bad. It would be so bad. I don't know why it would be so bad, but I'm not going to fire him. I just want him to, we call him Too Late, right? Too Late is his nick, like Too Tall Jones. He was too tall, T-O-O. And I just say this because we want to get rid of inflation, and we have. But we're going to be paying more for debt. And all he has to do is lower it. Europe's done 10 lowerings. We've done none.